Welcome back to Trader UK, the money management channel. Today I'm going to be doing another stock review, and this is a company that trades in one of my absolute favourite breakout industries. The company we're going to be looking at is on screen here for you now. It's Beyond Meat. You probably know that they produce plant-based meat alternatives, and you can see here that they've developed very high-profile partnerships with a number of fast food chains and supermarkets. Mainly across the last 12 months they've managed to do this. But even with all of this, Beyond Meat is often touted by analysts as one of the most overvalued companies on the market. So I'm going to take a good look at the company itself, the industry that it's disrupting, and then if you stick with me until the end, I've got an alternative company for you to take a look at, which has a much lower risk profile. Before we get going today, just a quick reminder to like the video for me, and of course subscribe for more similar content. Now, the idea of plant-based meat alternatives is a good one, but it's not really anything new. You've been able to get products like corn mince for a long time. I don't know if anyone else remembers eating that when they were younger. The problem with it in the past was, well, first of all, 10 years ago, there wasn't as much awareness that eating certain meats was bad for the planet and sometimes bad for your health as well. Now, just in general, we're more aware of how everything we do and eat impacts the planet. So how much meat we eat is definitely under the microscope a lot more now. The second problem was the taste. There was a big difference between real meat and the alternatives, whereas nowadays they're actually getting a lot closer. They're spending a lot of money on R&D, and they're getting the taste and the texture much closer to real meat. So now we find ourselves in this situation where we've got multiple generations of people that are concerned about the environment and their own impact on the environment. Plus, we've just got more and more people who don't like the idea of eating meat, which is starting to create massive demand for these types of products. It is thought that the global meat industry is worth about $2 trillion a year, so there's no wonder that investors get pretty excited at the idea of somebody disrupting that industry. And if we look here, plant-based meats, the current market share, pretty tiny when you compare it. It's 12.1 billion, which is a big figure, but compared to 2 trillion, it's not a huge amount. And it's increasing to 27.9 billion by 2025. So we're already set for big growth, according to these figures anyway. And to be honest, if anything, I would say that these figures are probably understated, if anything. I saw this piece of news a while ago saying a supermarket chain, it was Tesco's actually in the UK, that they're aiming to increase their plant-based meat offering by up to 300% to help offset its own carbon footprint ambitions. So I imagine that when they've looked at this, they've accounted for the natural growth, but if the retailers decide to really push the products and encourage us to buy more, then that's going to speed up the growth a lot more in a more artificial way, because it's not necessarily what we would have bought, but they want us to buy it to fit their own agenda. Not really a bad thing, but it is artificial. Now, for the purposes of today's video, let's say they have underestimated the growth here, and actually the market hits 50 billion by 2025, which is a bit of a stretch, but could happen. But remember, that is the global market for plant-based meat, so still relatively small considering, you know, overall $2 trillion market for meat. Now let's have a quick look at Beyond Meat's financials. The market cap at the moment, they've had a good run recently, but it's around $12 billion or so. 400 million in revenue, let's say 450 million. That's a trailing 12 months here, but it doesn't include the September quarter. So we'll say $450 million in revenue. So if the global industry is worth somewhere around 12 billion, then that means that they are capturing 3.75% of global demand at the moment. They certainly have made some high-profile partnerships. They had a trial with McDonald's, KFC, Subway, Starbucks, Alibaba. So we can be generous here because that's going to generate some some interest in their products, but let's be generous and assume that they can increase their market share to, let's say, 5% by 2025, and that is generous. There's a lot of competition entering this market. Let's say they hit 5% by 2025, and the market, we said, may be worth $50 billion. So that's revenue of $2.5 billion by 2025. Now, usually I would apply the gross profit margin and then try and work back to some kind of earnings figure, but their margins are constantly changing at the moment. It's early days for this company, so it wouldn't be very useful, to be honest. So another way to value the company would be by using a PS ratio, price to sales ratio, and comparing this to similar companies in the industry, which again has its own difficulties because there aren't really any companies. The only company I can think of that is 100% in the plant-based meat market like Beyond Meat is Impossible Foods, which isn't actually a listed company yet. Supposedly gonna IPO at some point, but not just yet. So we don't really have a market cap for that company. We could instead look at companies like Tyson Foods, who operate in the meat market itself. And we could also look at competition, Kellogg's, for example, who are best known for cereal, but they are going to be a rival for Beyond Meat in this alternative market. So at the moment, Beyond Meat trades with an official price to sales ratio. Price to sales, it means how many times revenue do you have to multiply by to get to the market cap or the value of the company. And at the moment, it has a PS ratio of 31 based on the 400 million revenue that is in the trailing 12 months. So even if we use my generous estimate of 450 million, once the September quarter is updated, that's still around 27 for a PS ratio, which is high, very, very high. But maybe it's just high for the industry. Like I said, it's a little bit difficult to get an exact comparison because there aren't many listed companies who only sell plant-based meats. But at the end of the day, this is still food production, so there should be some similarities with Tyson Foods. There should be some similarities with other companies as well. Tyson Foods here, they have an SP or PS ratio, of 0.5. So you can see how big the difference is. And when we look at Kellogg's, who are entering this market as well, they have a PS ratio 1.68. And of course, there are going to be differences here, differences between the companies, but there's also a lot of similarities. So it shouldn't really be that different. It should be 60 times higher than the Tyson Foods PS ratio. That is crazy. And I get it. I get that the ratio is high because there's so much room for growth. When you have these young growth companies, this tends to happen. But those price to sales ratios, they are going to be relevant eventually. At some point, they will be relevant because it's operating in the same market. So as the company seizes market share and kind of realizes all that potential and grows into the huge company that I'm sure it is going to grow into, that ratio is going to drop back down in line with the industry, unless it's doing something remarkably different, which sets it apart. And that means that at the same time, you know, at the moment, there's huge upward pressure. If they're announcing beating earnings and increasing revenue, all these positive things, there's huge upward pressure on the stock price. There's also going to be a lot of downward pressure where the more successful it becomes, the more of its potential has been realized and the more in line its valuation has to become with the industry standards. And just for a reference point here, look at this. This is the ratio for Tesla. I know it's a different industry, but people consider them overvalued as well. A lot of hype around Tesla, a lot of potential there. Tesla has a PS ratio of 16. And although I love the plant-based meat industry, I would still say Tesla and the EV market has more potential because the governments around the world are basically forcing a transition to EVs. They're phasing out combustion engines. So it's a forced transition. We won't have a choice on that. I cannot see the governments forcing a transition to plant-based meats, That's going to take a couple of generations or so. It's a much slower change. And if we did take any of those PS ratios, 1.68 or the 0.5, and apply them to Beyond Meat at the moment, then it's obviously heavily overvalued according to that. You know, your market cap wouldn't get near $1 billion. Your valuation's nowhere near $1 billion on those. So they need to expand their offering, in my opinion, to even have a chance of getting near that valuation. The wider market for plant-based products is actually a lot bigger. You have plant-based milk here. These figures show you for the US only, but you can see, by comparison, plant-based milk is actually a much bigger market. The problem with it is it's already saturated. When you go to a supermarket, you can find 100 different options already. Doesn't really need Beyond Meat to enter that market. The fastest growing market, you have plant-based eggs, but I don't think that's going to be big enough. I don't think people look as badly on eating eggs as they do on eating meat, so I don't see that it has the same potential. But all I'm saying is that they need a bigger market in the near term. They need to expand into something else as well. I've got no doubt that it will get there eventually, this market, but it isn't going to change overnight. Like I said, the EV market is changing overnight. It's being forced. Government's banning combustion engines, so a forced change, but it's nearly impossible for governments to ban meat in the same way. They just need to encourage consumers away from it over time. So this is a long game, really. So for me personally, I will not be adding Beyond Meat back into my portfolio. I have owned it before, but for me the valuation is really stretched. If I was still holding it now, yeah, I probably would hold on to it for a little bit longer, see if you can ride the wave a little bit more. But like I said, I do love the industry that they're operating in, the market they're disrupting and what they're doing. So what would be the alternatives? We could wait for Impossible Foods. That's probably the biggest competitor. They should be IPOing at some point. I'm not too sure when, but I've seen it in articles. They're currently raising capital at the moment. But I imagine now that we've seen the success of Beyond Meat's IPO, and with the IPO fever that we already have, I can't see anyone picking up any bargains there. So we could also look at the established meat suppliers like Tyson Foods, who are launching plant-based alternatives to try and capture a bit of the market. But I don't like this idea. I hate this idea, actually. The plant-based meat market isn't an addition to the meat market. It's replacing it. It's stealing the market. It's stealing revenue from Tyson Foods. So they have to do well in this sector just to maintain their market share. It would be like saying BMW are expecting to do well capturing the EV market. Of course they are. They have to do well. They're losing combustion engines, so it's too much risk to go with a company like that. But what I do really like is an already established player that doesn't usually operate in this particular market of plant-based meats or meat, but they have the infrastructure in place already and they can transfer some or all of their skills and partnerships across to this one. And that has to be Kellogg's. I've mentioned them already. They've got an incognito range, which was due to launch earlier this year, but it got delayed due to the pandemic. We know their cereal products, which are hugely popular everywhere. You just suspect that what's taken Beyond Meat a long time, years to put together, Kellogg's will be able to do overnight because they already have it in place with their other products. It would be harder for you right now to go out and find a supermarket that doesn't sell a Kellogg's product than it would be to find one that does. They're absolutely everywhere. And once you have that relationship with the retailers, it's not going to be as difficult to get your product on the shelf. So I can see this being an instant hit. Plus, Kellogg's is already a solid investment. 3.5% dividend yield, 13 billion turnover. So with a 13 billion turnover, if they can capture a few billion of this market by 2025, which I think is highly likely considering their products are marketed in 180 countries worldwide, then we're going to see substantial growth for Kellogg's. So for me, it's that simple. It's Kellogg's over Beyond Meat. My risk appetite isn't big enough for Beyond Meat at the moment. I'm sure I'll enjoy their products at some point, but I'm going to be sitting this one out. So that's all for me today. As always, I would be interested to know your thoughts down in the comments section. Are you investing in any particular companies trying to capture this plant-based meat movement? Thank you so much for watching if you made it this far in particular, and hopefully I'll see you next time.